Hey everyone, it's VTM Boss, and if you're into forex trading or just starting out, this video is your golden ticket to avoiding the most common and expensive mistakes newbies and even some experienced traders make. Let's be real, forex trading can be incredibly exciting. The potential to make some serious cash is definitely there, but there's also a ton of risk, especially if you're not careful. I'm talking about those little mistakes that can wipe out your entire account if you're not careful. Trust me, I've been there, made those mistakes, and learned the hard way, but that's why I'm here, to share those hard-earned lessons with you. We'll break down the most frequent forex trading errors I've seen, and the exact steps you can take to avoid them. We're going to turn those trading fails into trading wins. Let's get started. This first mistake is a classic, but that's because it's so crucial to understand. Imagine for a second, building a house without a blueprint. Sounds a little crazy, right? Well, that's exactly what it's like, trading forex without a plan. You're basically flying blind, hoping for the best, but likely headed for disaster. A solid trading plan is your roadmap to success in the forex market. It should outline everything, your trading goals. Are you in it for quick gains or long-term growth, your entry and exit points, how much risk you're comfortable taking on each trade, and how much you're willing to lose in a day before you call it quits. Listen, leverage can be a powerful tool for traders because it lets you control a larger position in the market with a smaller amount of capital. But, and this is a big but, over-leveraging using too much leverage is like playing with fire. It can amplify your gains, sure, but it can also magnify your losses in the blink of an eye. And trust me, those losses can come faster than you think. Instead of going all in and risking it all, keep your leverage low. A good rule of thumb is to risk only 1 to 2% of your account on each trade. This way, even if a trade goes against you, you're not wiping out your entire account. Have you ever heard the saying, sometimes less is more? Well, it definitely applies to forex trading. Overtrading or placing too many trades in a short period is like trying to force a puzzle piece where it doesn't fit. You're essentially gambling, not trading. It might feel good in the moment, but in the long run, it's a recipe for disaster. Remember, it's not about how many trades you make, but about making high-quality trades. Instead of chasing every little market movement, be patient, focus on identifying those high-probability setups, and wait for the right opportunity to strike. Remember, you don't need to hit every single trade to be successful. In fact, some of the most successful traders I know only trade a handful of times a year. Look, I get it. Risk management isn't the most exciting part of trading, but it's absolutely crucial. It's like wearing a seatbelt when you're driving. You might not need it most of the time, but when you do, you'll be thanking your lucky stars you had it on. This is all about protecting your profits and, more importantly, your capital. Always, and I mean always, use stop-loss orders. These are like your safety net, automatically closing your trades at a predetermined price level if the market moves against you. And aim for a reward-to-risk ratio of at least 2 to 1. That means you're aiming to make twice as much as you're willing to risk on any given trade. Risk management is how you stay in the game for the long haul. Listen, we've all been there. That rush of adrenaline when you see a potential trade, setting up the fear of missing out, the excitement of a winning streak, or the frustration of a losing one. Emotions are a natural part of trading, but letting them dictate your decisions? That's a surefire way to lose money. Trading when you're emotional often leads to impulsive decisions like revenge trading after a loss or jumping into a trade without doing your due diligence. The solution? Trade with a clear head and stick to your plan. If you find yourself getting caught up in the heat of the moment, take a step back, breathe, and come back to it when you're in a more neutral headspace. You know that feeling when you see the price of a stock or currency pair skyrocketing and you just have to get in on the action even though you have no idea what's driving the move? That's called chasing the market, and it's one of the biggest mistakes traders make. It might work out sometimes, but more often than not, you'll end up buying high and selling low, which is the opposite of what you want to do. Instead of chasing after those rockets, be patient. Wait for the market to calm down, look for those areas of support and resistance, and then enter the trade when you see a confirmed reversal signal. Remember, timing is everything in forex trading. The forex market is like a constantly shifting landscape. What worked yesterday might not work today, and what works today might not work tomorrow. That's why resting on your laurels and assuming you know everything is a recipe for getting left behind. Commit to being a lifelong learner. The more you learn about Forex, the more confident and successful you'll become. Read books, follow reputable trading blogs and websites, watch webinars, and even consider taking a course or two. You can even paper trade. That means practicing with a demo account to test out new strategies without risking any real money. The key is to never stop learning and adapting to the ever-changing world of Forex. Look, if any of these mistakes sound familiar, don't beat yourself up about it. We've all been there. The good news is that there's a solution that can help you sidestep these pitfalls and trade with more confidence and consistency. VTM AI. This isn't just some trading software. It's like having a trading expert by your side, guiding you every step of the way. VTM AI takes care of the heavy lifting so you can focus on the bigger picture. It follows a disciplined, pre-programmed strategy so you can say goodbye to those impulsive trading decisions. Plus, it has built-in risk management that automatically calculates your optimal position sizes, sets your stop-loss levels, and makes sure you're not taking on too much risk. Ready to trade smarter, not harder? Then check out VTM AI. Click the link in the description below to learn more and start your journey to becoming a more profitable trader. Don't wait, start trading smarter today.